What's going on, guys? How are you? How are you doing? We are going to talk about liquidity today and key market structure zones. We are going to explain what liquidity is and how it relates to market structure and its zones. Lastly, we are going to talk about how you trade using these concepts. Liquidity means orders where we have stop losses, limits, and stop orders. We have money, and that's liquidity. Money is liquidity. So, how do you spot liquidity in a market? You stop liquidity using a range of concepts, right? Number one, you're going to be using what we call equal highs. Number two, we're going to be using what we call trend lines. And number three, we are going to be identifying those using the zones that we use as resistance and support. So without further ado, let's jump right straight into it. So what you are going to do here is simple. This is a GBP USD H4 chart on TIOmarkets, right? So if you look at this chart right here, you see that this one would be taken as an A setup, break and retest when it comes to retail trading. So this is what we do. We mark here and expect price to break through and expect price to come back and retest this particular zone and go. But I want you to see what price did as it got back to this one, to this particular zone. So there are two types of traders, right? First trader will take the what? Will take the sell as soon as price breaks here, and we'll put the stop loss just above these candles right here, as you can see. And the next trader will wait for what? Will wait for retest of this particular zone. Some of the guys will put a sell limit there and wait for price to come and trigger them into the trade, and before they know it, the sell limit is triggered and the stop loss is triggered. So that's money. So what you are going to do here is understand how you can trade these structures without being triggered or without becoming liquidity, right? So what we are going to do is simple. Number one, we are going to understand that a lot of traders are trading in this zone, right? So what zone are we going to use so that we can be on the safer side? So if you look closely on this candle that broke this one this low, you can clearly see that it's a very aggressive candlestick that broke that, and a very aggressive candlestick will give you two things, that is an order block and a fair value gap. And what is an order block in this area? An order block is a supply zone that price might retest, right? Then a fair value gap is a gap that price moves, or an inefficiency gap that price leaves when it breaks aggressively. So if we look at this, you see that we have a fair value gap in this one, in this area here. So what do you do? How do you trade? You wait for price to break and you wait for other traders to go out, and their stop losses becomes your entry, right? So what you are going to do is you are going to work inside the fair value gap and the order block and put your stop loss above there. So this is what you are going to do. Your trade is going to be inside the fair value gap or inside the what? The order block. I prefer the order block to the fair value gap, but some of you might prefer both, and you can bundle them up and use as one point of interest like this, and you put your stop loss above, you end around the midpoint of the zone. So this is what you are doing, and this is how you can go around liquidity. So before we go there, let's talk about trendline liquidity. And you guys should know that we are bringing out a video on trendline liquidity in the next release, so you have to know what you are doing, and we'll go in depth on that one. On this one, we're just going to scratch the surface. So here we have a trend line, right? A lot of you guys will trade trend lines. Okay, so on trend lines, what do we do and how do we integrate trend lines with liquidity? Let's draw our trend lines on this one. So this is your trend line, right? So you have been taught and you have read books that said you enter on the third touch, right? So this is the third touch. I want you to see what price actually does on the third touch. If you look closely, you will see that the most breaks come on the third or fourth touch of a what? Of a trend line. Look at this. This is the third touch, and price breaks away, and it goes inside and fulfills our what? Our setup that we were talking about earlier. Trend lines are traps, and we'll go in depth on that. So for now, let's go and talk about equal highs for a bit. Let's talk about equal highs. So what do you understand by equal highs? Equal highs are used as support and resistance, right? So this can be taken as resistance right there. So I want you to understand something. As price goes up, right, it forms this equal high, as you can see. Then price comes back, retests an order block at the base here, and what does it do? It goes and breaks these liquidity zones that you can see. So how do you use an equal low in your trading? Number one, you can use it as your target, right? You expect price to break them. So if you enter a trade at an order block like this, as you can see in this area, you can enter a trade like this, right? You buy there, you are putting your TP at this equal high because you are expecting that equal high to be what? To be taken out, to be raided, right? So let's look at this particular zone, right? If you are to sell there, remember this is a downtrend, right? So you can take this as your what? As your supply zone, and you expect price to do what? To go back to this area and what? And sell off like this, right? So these equal highs, equal lows in this area are gonna help you to identify where this might actually go to, or you are going to identify what we call a what? A take profit in this what? In this particular area. So this is what you are waiting for. Remember, this is GBPUSD, and you are expecting price to go and retest this zone and go. So let me show you something that might interest you. I want you to see that we had a channel here. This is a channel, and remember, a trend line accumulates what? Liquidity. A trend line accumulates liquidity. So it means that we have money there. All right, we have money here, we have money here, and we have money on every high that you see here. So when price breaks a trend line liquidity zone, it breaks aggressively like this. And remember, this was what? This was NFP, and sometimes those events are used to what? To take out all the liquidity residing at a trend line or in a channel. So if you see, most of the times when the channel breaks, it goes all the way to the beginning of the channel. Like in this case, you see that this was the initiation of this channel, right? So when price breaks here, it breaks everything in this area and goes for what? For that particular zone, as you can see. So this is what you are seeing on what? On GBP, on Euro USD. And I want you to show something on gold here and how you could have traded this particular one. So this is gold, and what do you see? What you should see first is the what? Is the equal lows in this area, right? So these equal lows are being marked by someone out there in the world. Someone has this, and he has these types of lines on his chart, right? So I want you to know something. If an area has been retested many times, the break is imminent, right? If an area has been retested many times, the break is imminent. That's what you have to understand when it comes to liquidity. That simple fact, or that simple concept, is what is gonna save you. So with this particular chart here, you can clearly see how price is gonna move here. This is gold, and this is the H4. What you are going to see here is probably a break of this high first, right, and a break of these two, which is the equal lows that you see in this area, right? If this breaks, it will move like this, it will go like this, breaks these two, then maybe retrace back and retest this one, this zone right here. That price is just what? That price is just formed here. So we'll see a move like this instead of a move that you see just price retesting this particular one and go up. So we are going to take out this liquidity, and price is going to go. So for you to understand, let me just show you where this has happened before. On this particular chart, you see this one, these were equal lows here, and price went and retested the what? This order block right there, broke this with pins, and came back, retested a what? A supply zone that price had formed as it was going to break this, and you see how price reacted and went up and took all those lows and liquidity that was resting below that. And I want you to show something, the trend line that I was talking about. Remember, we have liquidity on a trend line, and remember, the third and fourth touch are not to be played with. We have first touch here, second touch, and this is the third touch, and see how price reacted at that particular zone. It just went through it like there's no trend line there. Right, the next thing that we need to talk about is here on GBP AUD, and what you can see here, this is the H4, and I want you to see something. Most of you might not see it on first glance, but do you see that we have a pin on this what? On this chart here. So what did price do? Price took out this high with a pin and came back and going. So how do I know that price is going to take out this low right here? I know using this pin, because this pin took a lot of traders out. Some were buying, some were selling. Everyone was caught off guard here. So price is going to break this. This is more like a give. Make this move, maybe come back and retest this order block that I've just marked there and go like this. Why? Because of this pin. So this is a a classic example of how smart money collects money in the opposite direction and they go in the other direction. So if you had seen this break, the aggressive break that would have happened here, and this candlestick, as you know, was green at some time, full green, right? Then price just whisked away and go away. So they are going to take liquidity here. So there's sell side liquidity there and buy side liquidity was taken, and price is not going to retest there and go up because of this pin. So this was a stop hand and they got the stops. Now the smart money is going to go for the sell side liquidity in this other direction. So we might see GBP AUD going as far as what, as this area right here, just by using what, liquidity concepts. And when you want then to integrate the market structure concepts with liquidity, you understand that the market structure will give you direction, right? If you look at this chart here, you see that we have market structure, right? All this area, this is an uptrend, right? How do we know? We know by market structure. So it means that if we have market structure on our side, it can help us to understand which liquidity we are going to be using, right? Look at this area, right? Remember, I said this is a downtrend already. Why? Because we have taken out this low, right? So there's been a change of character at this particular zone. So this change of character will inform us that price is now going down, which means we are taking that from what? From market structure. And if we go to the H1, you see this clearly. So this is the H1. The chart that you are most interested in is this one, this particular yellow zone, where you are seeing that price is now going down using market structure. So which liquidity are we going for now? We are going for sell side liquidity, which means we are going for equal lows and we are going for trend lines that telling us to buy, or trend lines like this, right? Where you are drawing these bearish trend lines for you to expect price to retest and what, and go up. So we are breaking these types of trend lines and we are breaking all the equal lows that you can see. And remember, we have this equal low right here in this place, and this price is going to break that and break this from the H4 and continue going down. So market structure will help you with bias and will help you understand which side you are going and which side you should align with, because remember, there is buy side liquidity and there's sell side liquidity. So you have to know which side you are on and understand what you are doing, right? So without further ado, this is what I wanted you to see. And remember, the trend line liquidity video will come out, and look out for that. And if this is something that interests you, please like this video and drop a comment in the comment section below so that we can continue the conversation. Shocks out.